Anthony, Michael, why do I want to be an Asian fixed income in 2012?
I think as a fixed income investor, you've got to think about solvency. You've got to think about lending to countries that have got strong fiscal dynamics, countries that are growing, countries that have got large foreign exchange reserves, good demographics, high savings rates. And you need to diversify out of developed economies. I think for the next few years, the West is going to struggle with all this debt, all the deficits, and they're going to have to, cut the debt for the next couple of years.
Well, is China in particular as solvent as people think it is? We keep hearing about a lot of cities with no people in it and malls with no shoppers.
Yeah, we think China's going to grow at about 8% next year. It's slowing, no doubt about it. Exports are slowing. The government's been cutting back in terms of property. On the property side, property speculation, property development, so property prices are coming off. But I don't think there's going to be a hard landing in 2012 for China. Sure, there's probably some skeletons in the cupboard from all the spending they did back in 2009, 2010, coming out of the global financial crisis. But we don't expect a big hard landing in China. They're already starting to ease. They're already starting to cut interest rates on some lending and allow more liquidity in the system to try and make sure that growth continues into 2012.
What about South Korea? The won has had a rough ride in the fall.
Yeah, a lot of Asian currencies have had a pretty rough ride, particularly in the last 3 months. It's been this flight back into US dollars, been a shortage of dollars. To its credit, the US economy has grown better than expected, and so we've seen some more capital come back into the US and out of emerging markets, out of Asian currencies. Korean won's one of the most cyclical currencies, so it's one of the most volatile in terms of reacting to the cycle. I think if we can sort out some problems in Europe and get some stability and confidence back in financial markets, the won and a whole lot of other Asian currencies are going to do a lot better in 2012.
In your fund, you own a lot of Australian bonds. Should we expect more good things from them in 2012?
I think so. Again, a AAA rated government, strong fiscal dynamics. As a fixed income investor, as a lender, you want to lend money to strong entities that generate yield. The yields are still pretty attractive over there. As a AAA rated borrower, I think Australia's still got to be part of your diversified global fixed income portfolio.
Finally, any other countries that might shine in 2012? You own some Malaysian bonds in your portfolio, Indonesian bonds. Any outliers?
I think maybe it could be a better year for India in 2012, okay? So 2011, 2010, really tough years, really high inflation. India's an outlier in Asia. It's got current account deficits. It's got a bit more debt than the other countries, but it's got 8% bond yields. If they can get inflation down, get on top of the deficit, then India can be one of the sort of outlying better performers next year.